Back with you here on the Market Day Report. I'm Marlon Bowling. We're watching your grain and livestock market activity, and it's been fairly exciting already on the grain side. Let's go take a look at where we stand right now. A lot of weather impact here on the markets, and let's go take a look here first of all at the corn market in Chicago. Live quotes here, and on the corn board at the CME group. We have the July contract 9 3/4 higher at 376 1/4, within a penny of its high of the day. December new crop corn 8 1/2 higher at 393 1/2 per bushel, also within a penny of its high of the day. Soybean trade, we've seen double-digit gains here today. It kind of eased back off of them a little bit last check. Now they're firming up again. July soybeans now 15 3/4 higher. Last trade 972. So we're still 2 pennies off of our high of the day. We have November new crop soybeans 12 3/4 higher at 966, about 2.5 cents off of our high of the day there. More importantly, it is about 12 cents off our earlier low. Wheat trade is where a lot of the excitement is today, and we have Chicago wheat on that July contract up 18 1/2 at 450 3/4. Meanwhile, if you look at the Kansas City market, where they received up to a foot of snow out in southwest Kansas, wow, pretty good weather rally taking place in the wheat market today. July now 21 1/2 higher at 458 3/4. And in the Minneapolis wheat trade, we have July currently 9 1/4 higher at 564. July cotton is currently trading at 78.98. It has been on both sides of unchanged. Now we're back on the plus side by 11 points. Let's go to the trading floor in Chicago. Find out what's going on at the CME group there. And here we have Todd Bubba Horwitz standing by. And good to visit with you there, Todd. I wanted to ask you, first of all, about this wheat market here. We saw all kinds of photos and videos and everything out of southwest Kansas. We tried to tell everybody they were talking snow in Kansas. Market didn't seem to believe it heading into the weekend. I think maybe there's a few believers today.
Good morning, Marlon. Yeah, listen, if they listened to RFD TV or XM 147, they'd have known that wheat was going to go higher last week.
I'm telling you, right? Yeah, we talked about it at length last week.
You know, I think that, you know, I'm not a big believer that it was necessarily the weather. I think it's actually they trapped a few people that were short, and also that there was some strength building underneath the markets, that we got the expiration out of the way, which was, I think, causing a lot of the problems last week. So once we came off the board, once the options came off the board, we now had buyers stepping in. I think that's what we're going to see, and I think we're going to continue to look for higher prices. I think you'll probably get a little bit of a pullback from, you know, somewhere around, you know, 450 in wheat, probably, you know, 380 in corn, in July corn, and probably somewhere around 980 in soybeans. But I'm looking for, you know, higher prices to go. I'm looking for over $4 in D's corn. I think that, you know, I'm looking for $10 in July soybeans, and I'm looking obviously over $5 in December wheat when we finally get there.
Now, why do you say that? Is it more weather-related, seasonal-related? Why are you looking for numbers like that?
Because I think that the markets for the last few years have been under a tremendous amount of duress because of all the outside factors that were affecting them. Too strong of a dollar, too much confusion with the Fed, a way too strong stock market. I think that those things are starting to change. We can already see it in the dollar. We see the dollar coming down. We can already see it in crude oil. Crude oil is coming down. So all these things that were adversely affecting our markets are now turning around and bringing in. Plus the fact that I think you'll start to see some new money come in to the markets from an alternative investment side as well. So between the better conditions, the weaker dollar, and the alternative investments, I think they push these markets much higher, which I think is where we belong. That's where I think we should be anyways.
Well, we have the West Texas Intermediate crude around that $48 mark. I know you've always been a proponent for a long time, around $40. Have you changed that at all?
No, $40 I think is a legitimate number. I think, you know, we've got more fuel efficiency, we've got too much supply, and now that Trump signed an executive order to let them go out and drill at the Arctic again, that could create more supply. So I think until the economy picks up, until things get better, oil prices should continue to fall lower. Now, I wouldn't be surprised if we had a little bounce here in the next couple of days. We've actually come down quite a bit, but overall, I think we're headed to 40.
Okay, Todd, I'll bring you back here in a moment. We'll talk a little livestock market action. That one's hard to decipher, too. Todd Bubba Horwitz of BubbaTrading.com is our guest. We'll have more right after this. Even July oats up 8 1/4 cents here this morning. Interesting developments in the crop markets, that's for sure. We're talking with Todd Bubba Horwitz right now. He's with BubbaTrading.com in Chicago, and he's positioned right at the edge of the trading floor there. All right, we were talking last week about all the tremendous strength that we saw in the cattle complex, and then we went into expanded limit mode on Friday, which apparently scared a few folks out of the market early in the day. Friday morning, we had a little bit of a sell-off there. It lasted about a couple hours, and then it seemed like the selling ran its course. They came in buying with a vengeance, ran the market up sharply by the end of the trade on Friday, and that was the final trading day of the month. Now, today we came in, opened up a little firmer, sold off, and now here we are firming up again for the second time today. June live cattle now up 40 at 124.42. We're off of our low now by 70 cents. On the feeder cattle side, we now have that May contract down a dime. August down 15 at 154.55, but that's about $1.35 off of its earlier low of the day. Still about $1 away from our high, though, so a lot wider ranges going on in the feeder cattle market. This seems to be a market that's seeking out its way here today on a Monday.
Well, you know, I think you have a couple of things going on, Marlon. I think, first of all, you've got a tremendous squeeze, and I think that's going to end this week. We had, I think, in the fat cattle, we had the April-June squeeze. That'll end shortly here, and I think you'll start to see some pressure. I think you also had a lot of people that were still short this market that are now trying to buy, so every time you get a dip down, they want to step in and try to buy to get out, which is a better indication that the markets are probably nearing a chop here. Now, again, you know, I was wrong. I was trying to sell them earlier, and it was not the right play. Obviously, it was expensive. It was an expensive play. I think that somewhere in here, there's going to be an opportunity to sell them here, and they're going to come lower. Now, again, longer term, I'm very bullish, but I do know that this backwardation formation that we're in has to get reversed before I'm going to get overly bullish here, and that will change. But until then, I think we're going to see the June start to come down here. You know, but again, I'm not going to fight it here. I'm not going to tell you today is the day. But as soon as you can start to see the momentum starting to turn, which I think we started to see, even though Friday was much higher, I think we started to see some of the momentum change over, and we'll see how it trades out. Again, there's really not much of a trade here for farmers and producers. I hope they go to the moon. But as a trader, I'm looking for a spot to sell off where I can actually buy lower, but I'll try to take advantage of both sides, selling and buying.
Todd, how does that work on the livestock side? When they go into expanded limit mode, is that for one day only now, or does that last for 2 consecutive days?
I think it's one day only when they go to the expanded limit, and then, you know, of course, all they're trying to do is take tension off the market. And it's been very, very rarely have we seen a limit move followed by meeting the expanded limits, because that's why they do it. They try to take the pressure off the vessel and let it sit there so the pot doesn't boil over.
All right, so that means expanded margins should be reduced back down again today to start out the month of May then.
Yeah, I think so. And then again, what we're looking at is just a market, you know, that is going to make a decision here. Now, it could go higher. Look, we had, you look at the chart, and it's gone parabolic for the last 3 days until today. And today's not over, so it could continue that range. But overall, I cannot imagine that it will continue through today. Now, it doesn't mean that the end is near. It just means that this overall straight-up parabolic move is going to slow down, and then we'll be able to get a better read on where the next direction is. But again, the biggest thing that I'm watching is the backwardation between June and August right now. And until that reverses over, I'm going to continue to be looking to be a seller.
All right, thanks, Todd. Todd Bubba Horwitz of BubbaTrading.com in Chicago. A real quick look at our lean hog market here, and I'll turn the reins over to Christina. Still a little weakness. June lean hogs down 45 cents at 73.55. So just a dime from our low of the day so far.
Okay.
Still already kind of choppy.
A little bit choppy. Watching those grains with high anticipation for today.
It's a good spectator sport today.
Okay, Thank you so much. Markets editor Marlon Bolling.